Hi, this is Zach Mir with the Major Markets Review here on Share Talk for Thursday, the 8th of March. And starting off with the FTSE 100, where we've got this rather puzzling failure near the 6,800 level. It should have been a done deal for this market to get through 6,800 and then push to the Great Blue Yonder up towards the top of that rising trend channel from September at 7,500. But so far it's not to be. Sort of looks as though this market wants to retest the 50-day moving average again around 6640 and also the floor of last year's trend channel at the same level. And maybe if you are in any doubt regarding this market, you would be looking at that kind of area. The other point to note, I suppose, is the RSI trace. We peaked around 60 in February and sort of around the same level now. So it's a slight hint of bearish divergence, but because we've had a slightly higher resistance for slightly higher highs for March, but still, the main point here really is that we haven't broken 6,800 and we've got the risk of 6640 over the near term. Moving on to the DAX, which has not been quite so sheepish in the near term. Here we'll see, hopefully when it comes through, that we've got a much more positive type of price action. Gap higher today, which is always good to see. Kind of makes you feel that the FTSE will eventually follow, but maybe there are different fundamentals at play between the Europe and the UK at the moment. The top of the rising trend channel heading towards 15,300, and that's certainly on the cards while we hold above the floor of the latest gap, yesterday's high at 14,600. So above 14.6, looking for 15.3, and that could be seen, I suppose, as soon as the end of this month if this market manages to get a move on. Onto the Dow, and here we've got a situation where it's, I suppose, between the DAX and the FTSE. I suppose nothing can be as slow as the FTSE at the moment, but 33,007, well, it's 33,800 at the top of that resistance line there from September. That's the near-term target. Not a great-looking candle today, so one wouldn't want to see an end-of-day close back below yesterday's floor, 32,000. Let's call it 800. Otherwise, we would risk returning down towards 32,500 area. But this looks like a reasonable breakout, nothing really wrong with it. And if you're pushed, you'll probably be looking for 33,800 as the target over the next few weeks for the Dow. Onto the S&P 500, and here we can see that the market here, it's more along the lines of the FTSE, I suppose. Maybe that's telling us something. 40,035 is that resistance line projection target, which we haven't been able to hit or get even near to on this occasion. A bit of a key reversal to the downside as well for the S&P today, so that's not good. So it does give the impression that we're going to head down to that September support line and the 50-day moving average at 38.50 over the next few sessions. Only back above today's key reversal peak, 39.88. Obviously, we stopped just below 4,000. Would really delay that little bearish setup that we've got at the moment. Also, I suppose it's a bull trap through last month's high at 39.63. So a bull trap through there and back for the S&P. Moving on to the NASDAQ, and here you can see that it's a sort of another amalgam of the markets that we've seen so far. The NASDAQ 100 looking as though here we've failed at the 50-day moving average, so looking as though it's the more bearish of the markets. All the other markets we've looked at so far are above the 50-day line. 13,200 is the 50-day moving average level, and at least while we're below that, the risk is a retest of March support at 12,200. That would be seen probably over the next couple of weeks, but at this stage not anything more serious than a retest of March support, although I suppose that wouldn't be great if you are leveraged up to the hilt and looking for higher prices at the moment. Going on to the currencies, first up is the British pound versus the dollar. Here you can see that there is there's been a sort of consolidation at the lower levels, a successful one, I suppose, but getting blocked to $1.40. We've had $1.40 just above that over the last over the course of March to date. I think the high there around 140.17, the high today 01. So really looking for a break, end of day close above $1.40.20 to give us the big target on the upside now at the top of the rising trend channel. not far off the 144 area. That's the top of the September trend channel. Otherwise, the most easy thing to say here is that we'd have to go and test the 50-day moving average area and the floor of the channel around the 138.20 to 138.50 zone over the next couple of weeks. So I think after so many failures there near 140, it would be logical to assume that we might have to have a bit of a retracement, but the pound is famous for not being logical at all. On to euro dollar, and the prospect here is of I suppose a little bit more on the weakness side. We've again sort of failed, just like the pound failed near 140. We failed near 120, and it looks as though at least we'll have another test of the 200-day moving average area, $1.1845. We managed to avoid touching the 200-day line earlier this month, which was impressive. Let's see if we're that lucky this time. Obviously, the downside, or the temporary downside scenario, would be broken by an end-of-day close through 120 to give us the 50-day moving average as a target at 120.70. On to the commodities, the couple that we look at here. The first one is gold dollar, and here we've got a situation where we're still got that sort of bumping along the bottom type feeling for this market. But the good thing, I suppose, here in the recent past is that we hit the red support line there from July, the floor of the channel there. Bit of an overshoot on the downside below 1707. We managed to recover from that, but it doesn't seem very convincing in terms of being able to recover that old floor from back in November at 1764. Below that, we're still on a sort of toppy type of a heavy type of look to gold, which given all the alleged inflationary pressures we shouldn't be having at all. This market should be soaring, soaring probably in the way that Bitcoin is. So that's the kind of market it should be, but it's clearly not that at the moment. So 1764 and really holding 1700 are the two support and resistance levels at the moment. Going on to crude oil, which has been an amazing star performer, I suppose, given the fundamentals that we're not really out of the pandemic and we're not really back to work. Here we've got a situation where after the bull trap through 63.80, we managed to have a decent follow through, but it's a rising wedge that we've come up against. And while we're below that broken support line there, around 61.50, we are risking not only a retest of the 50-day moving average of $58, but also perhaps back towards the initial January resistance, which was around $53.90 to $54. So $54 while we're below the 61.50 area for crude oil at the moment. Looking rather more chirpy at the moment is Bitcoin, which I will attempt to call up in one of the better data feeds that there are at the moment. I think we can go for BitBay. Here we've got a situation where there's been a decent hammer candle for this market today. We're right near the highs and also near the resistance of Tuesday and Wednesday. So call that 57.250 or 260. Just need a little bit more on the upside now. So maybe an end of day close through 58,000 should be enough to give us a target towards 65,500 over the next couple of weeks. So any break of 58,000 now looks pretty strong for this market, and we can almost rule out the idea of any bearishness while we're above recent March support at 52,000, or the last support for this market. That's it for me today. More updates later in the week.